Welcome back to my channel, Crypto Daily Updates, your hub for the latest and most exciting crypto news and market updates. In this video, we will discuss the three major events that will trigger the next crypto bull run. Predicting the exact events that will trigger the next cryptocurrency bull run is highly speculative, as the cryptocurrency market is influenced by a complex interplay of factors, including technology developments, market sentiment, adoption, and regulatory changes. Before we dive into the content, if you're new here, do yourself a favor and hit that subscribe button, and don't forget to smash that bell icon so you will never miss out on the latest insights, tips, and opportunities in the cryptocurrency world. So let's begin. Based on my research, the first event that will trigger the next crypto bull run is what we call Federal Reserve Quantitative Easing. Federal Reserve Quantitative Easing can potentially trigger the next cryptocurrency bull run through various mechanisms. Quantitative easing, QE, is a monetary policy tool used by central banks, including the Federal Reserve in the United States, to stimulate the economy during times of economic stress or recession. One of the primary goals of QE is to inject liquidity into the financial system by purchasing government bonds and other assets. While this can help stimulate economic activity and prevent deflation, it can also raise concerns about inflation. Investors often turn to alternative assets, including cryptocurrencies like Bitcoin, as a hedge against the potential devaluation of fiat currencies caused by inflationary pressures. This increased demand for cryptocurrencies can drive up their prices. QE is typically accompanied by low interest rates, as central banks aim to lower borrowing costs to encourage spending and investment. When traditional interest-bearing assets like bonds and savings accounts offer low yields due to low interest rates, investors may seek higher returns in riskier assets, including cryptocurrencies. This search for yield can lead to increased demand for digital assets. If QE leads to a significant increase in the money supply, it can weaken the value of the US dollar. Cryptocurrencies, especially Bitcoin, are often viewed as non-correlated assets not tied to any specific country's monetary policy. During periods of dollar devaluation, investors may turn to cryptocurrencies as a store of value, contributing to their appreciation. QE measures can create a speculative environment in financial markets. Investors may seek out assets with the potential for rapid price appreciation, including cryptocurrencies, in the hope of capitalizing on market exuberance and liquidity injections. QE can contribute to a risk-on sentiment in financial markets, where investors are more willing to take risks and invest in assets with potentially higher returns. Cryptocurrencies are often considered a risk-on asset class, and increased risk appetite can lead to more capital flowing into the crypto market. The Federal Reserve's most recent round of quantitative easing, QE, was initiated in response to the economic challenges posed by the COVID-19 pandemic. The Fed announced this program, known as QE4, on March 15, 2020. Under QE4, the Federal Reserve committed to purchasing a significant amount of U.S. Treasury securities and mortgage-backed securities to inject liquidity into the financial system and support the economy during the pandemic. It's important to note that while QE can have an impact on cryptocurrency markets, the relationship is complex and influenced by numerous factors, including market sentiment, macroeconomic conditions, and regulatory developments. Cryptocurrencies remain highly speculative and volatile assets, and their performance can be influenced by a wide range of factors beyond QE. Investors should exercise caution and conduct thorough research before making investment decisions in the cryptocurrency space. The second major event that I believe it will trigger the next crypto bull run is what we called regulatory clarity. Regulatory clarity, in the context of cryptocurrencies, refers to well-defined and transparent regulations governing the use, trading, and taxation of digital assets. Regulatory clarity can play a significant role in triggering the next crypto bull run for several reasons. The first reason is that it can increase investor confidence. Clear and favorable regulations can provide a sense of legitimacy and security to both retail and institutional investors. When investors have confidence that their activities within the cryptocurrency market are legal and that they are protected under the law, they are more likely to enter the market or increase their investment. This influx of capital can drive up the demand for cryptocurrencies, leading to higher prices. The second reason is that it can trigger more financial institutions to participate in trading and investing in cryptocurrencies. They will also likely to use cryptocurrencies in their daily cross-border transactions. Institutional investors, such as hedge funds, asset managers, and pension funds, often have strict regulatory compliance requirements. Regulatory clarity can give these institutional players the confidence they need to allocate capital to cryptocurrencies. The entry of large institutional investors into the crypto space can lead to substantial investments and further mainstream adoption. The third and important reason is that it can provide consumer protection. Well-defined regulations can help protect consumers from fraudulent schemes, scams, and unscrupulous actors in the cryptocurrency market. When consumers feel more secure and protected, they are more likely to use cryptocurrencies for various purposes, including investing and transactions. Clear regulations in one country can also attract international investors who are seeking a safe and compliant environment for their crypto activities. This can result in a global flow of capital into markets with regulatory clarity, further boosting demand for cryptocurrencies. Clear regulations can pave the way for the development of cryptocurrency-related financial products, such as exchange-traded funds, ETFs, and futures contracts. These products can make it easier for traditional investors to gain exposure to cryptocurrencies, potentially leading to higher demand. However, it's important to note that the impact of regulatory clarity on the cryptocurrency market can vary depending on the specific regulations enacted and their overall impact on market sentiment. Regulatory developments should be closely monitored by those interested in the cryptocurrency space, as they can have both positive and negative effects on the market. The third major event that will trigger the next crypto bull run is mass adoption and utility. Mass adoption and utility refer to the widespread use of cryptocurrencies for everyday purposes, such as buying goods and services. When cryptocurrencies gain practical uses and are accepted by major retailers or integrated into various industries, their value can rise due to increased demand and acceptance among the general public. This acceptance and utility drive mass adoption, attracting more people to use and invest in cryptocurrencies. It's important to note that these three major events can possibly trigger the next crypto bull run. It's important to know that the cryptocurrency market is highly speculative and subject to rapid and unpredictable changes. Investors should conduct thorough research and consider the inherent risks before participating in the market. Additionally, the cryptocurrency market is known for its volatility, and a bull run can be followed by a significant correction, so it's crucial to approach it with caution and a long-term perspective. Consider seeking advice from financial professionals before making significant crypto investments. So that's covered our video for today. Until our next crypto update, keep your finger on the pulse of the crypto world and make money of this exciting cryptocurrency journey. Please subscribe and hit the notification bell so that you will be notified to my latest videos about cryptocurrency. Thank you for watching and see you in the next video.